Hello, everyone. Welcome to Kryptonized. Today, some tokens I've never even heard of. And as always, I bring Barnaby on when I need to be, awoken to what else is happening in the crypto space. It's just so dynamic and it's moving so fast. So today we're going to talk about Titano and all of its forks and what the heck is going on here. Barnaby, no introduction needed, but maybe you can give us a background on what Titano and its forks are, and make sure I'm pronouncing it correctly.
I think people don't even know how to say this stuff. Titano is good. I call it Titano. It just seems like that. They call
Like
each other
Titanic?
Titans. They call each other Titan.
Does that mean it's heading towards an iceberg?
I don't know. Like, could be. Well, here's the. We just need to do a quick little background back in
Yes.
Wonderland time and Olympus DAO, because they set the stage. It started last year with this Olympus DAO that produced some forks that became huge with Wonderland, that then had this epic crash. And we're not going to go into all the details about why that happened, because it was really a lot to do with not so much the tokenomics, although yes, but also with the people who Daniel, who was managing Wonderland, who he had managing the treasury. It was bad, very tragic.
But also, they didn't have a phase two. It's like they kicked it off great, but the phase two was terribly executed or didn't have a vision.
Amongst all of that happening, this other site came out called Titano last November. So November, like almost 6 months ago, right? So they came out and they launched on Binance Smart Chain, and they took some of the ideas of this rebasing. That's what they call it, the rebasing. But instead of doing it every 8 hours, they did it every 30 minutes. And instead of it being fluctuating, like the way that every day it was different on Olympus and Wonderland, etc., they made it fixed at like 100,000% APY. Only that. At 1.91% per day. 1.9. Does your bank even give you 1.9% per year? No. So here they are giving that.
I think they're taking money from you. They're taking money from me, is what I think my bank does. But go
so
ahead.
Titano, I mean, so they launch, and to be honest, I found out about a month later, and I was like, let's see. I was interested in rebasing. I like testing these things out, and I saw it had this huge run up as it launched, and then this massive crash, and to be honest, that's when I jumped in. I was like, oh, maybe that's a good price point. And so I got in there, and it's been a wild ride. And yet, so what's interesting with these ones, again, is that unlike the Olympus and the Wonderland, you don't have to do anything. They keep on issuing more tokens to your wallet. Nothing. You do nothing. You literally have just new tokens showing up every 30 minutes. Now, that's hugely inflationary. And so more and more tokens on an epic scale being produced every 30 minutes. And now there's a burn rate, but also above that, there's a sales tax. So you're not going to want to trade these every day. For you to get in, I think it's like 13% they take. And then when you exit, when you sell, 18% on Titano. So you're not going to be wanting to trade this very often at all, because basically, if you bought it today and sold it tomorrow, you're losing about 33%, just even if the price stays the same. So in order for you to get a return, basically either the price has to go up or you have to wait some weeks. And that's what's actually that's what's created an interesting dynamic. This gamification around how long do you hold this? Like every time, and also it has this effect on your psychology. Like when you go to sell that, you're going, oh man, I'm going to just lose 20% on that. And so just it creates this very strange dynamic.
It seems to me it's like musical chairs. I mean, eventually, you're going to have no chairs left to sit in, or maybe it's just the reverse. It just keeps adding musical chairs, and you need to sit in as many as you can. And if you stop, then you got 18 of your chairs pulled away from the 18%.
Totally.
Maybe I'm not describing it correctly, but it just seems like you're constantly trying to figure out when to get in, when to get out, and it seems stressful to me.
Yeah, I mean, this is high risk, super high risk. I mean, so this is Titano.finance. Look, there's no financial advice in any of this. This is all crazy risky.
Yes.
But you can see that they've already grown their market cap to 150 million. And they've got over 80,000 holders in this platform. And their price has gone up significantly. They've had a big drop, and now here's the thing. It is an interesting moment because their price has started going back up. And its high has been 20 cents. And so it has not, I think it's been 3 or 4 times it has tried to get above 20 cents and it fails. and has dropped down back to like 5 or 6 cents. And it hasn't been able to drop below, I think, 5 cents. So it's a very interesting product. Zoom has, for the whole last 5 or 6 months, hitting 20 cents, crashing back down to 5 cents, going back up to 20 cents. That's what it's been doing. So it would be very bad if it drops below 5 cents, and it would be crazy if it breaks above 20 cents. Because once you get when you break through the resistance or you crack the support, we always know it's not good. So the average holdings are $2,000. The next rebase is in 7 minutes, every 30 minutes. They've got a backed liquidity, but it's all about the community. Now, if that wasn't enough, well, obviously when there's success, people go, oh, let's make a copy. So they launched another company or team launched Libero, and 100,000% APY wasn't enough, so they made it 158%. And then if that wasn't enough, this other one called Safuu came out at 380.
Notice how they put safe in the word. I think
that's right. But they do that every 15 minutes. It's actually the same kind of algorithm, but instead of 30 minutes. And that's the curious thing. When you start rebasing more frequently, the APY goes up. And then there's another one called Sphere. And you know what? There are even others. But these four, I think Libero's got 100,000 people in the community. Titano's got 80,000. I don't know, Safuu, I think it's like over 50,000. And Sphere has got, I think, 30,000. It just came out. It's like the newest one. And so they claim, one of the things that they all claim is that how they've been audited by Certic. They've had their KYC checked by various companies. So this one's a little bit less, actually, only 99,000. 34,000 people are in this one, in Sphere. They all have their own little tweaks. Curiously, of all of them, the Safuu one's chart has been not actually doing a lot of crashing. Not compared to Libero's had a massive crash. Sphere has just had a crash. But Titano seems to lead them. And they have a lot of people, obviously, to be honest, this sort of community, they're in all four of them, I'd say. The people who are into this stuff, they like to place it. They're very tribal. There are some who are like only saying, oh, it's only Sphere or Titano or whatever. But there are many who place bets in all of these. And obviously there are 1,000 types of other DeFi projects. What I mean is 1,000 different DeFi or more, 10,000. But of the different types, like we had those Ohm forks last year. Now we have what are called the Titano forks. Then there are these other ones called miners that you actually just mine tokens. And then,
I've heard of these. Yeah.
And there are even probably a dozen plus other just different types of DeFi algorithmically programmable money. And so what people are doing, I mean, I've been in DeFi since 2019. That's when programmable money got me excited. And what people are looking for is how to crack passive income algorithmically so that you don't have to trade. There's a very interesting idea here. What if all of this whole DeFi was trading 2.0? I don't know if anybody's actually said that. But if you think about it, trading, you know what that is. That's when you buy Bitcoin at $10,000 or $20,000 and you sell it at 40. That's trading. You're in and out. You bought yourself 10 Bitcoin. You never had any less or more than 10 Bitcoin. You held it until it doubled and then you sold it. That's pretty simple math. Everybody can understand that. But we all know that that's not so easy to do. Buy Bitcoin at 20,000, sell it at 40. If it was easy, everybody would be doing it. So
everyone would be doing it.
Trading is really hard. In fact, they say that 90% of traders lose money because it's so hard to time the market. Right now we're at 41,000. You tell me, is Bitcoin going to go back up above 50 or is it going to drop below 35? People really just...
You don't know.
They don't.
Yeah.
They don't.
And when? You could say it's going to 100,000. I know a lot of people believe that. But then when? Tell me when. Give me an exact date. Everyone that we had predict on this show what Bitcoin price would be at the end of 2021 got it wrong. And it was anything from 3,000 to 100,000.
Absolutely. People really... So that's why trading is so hard. There are some really great indicators. There's all this great mathematical you can do all this stuff about it. But basically, it boils down to typically time in the market is better. Like when you just said that was great. You're probably confident that Bitcoins go to above 100,000. Most people in the world are still not. Most people don't own any Bitcoin. That means most people do not believe Bitcoin is going to 100,000.
Yeah.
So or
they just don't know what they don't know. But go ahead.
So that would mean that because you and I are pretty confident, we should own some Bitcoin and just not sell it, according to that thesis. You just hold it, never touch it, because if you in 5 years' time, probably be above $100,000. That's probably how our logic goes, something like that.
Yeah.
Even though the world has gone completely insane, and to think,
Well, that's why I would invest in Bitcoin.
there you go.
It's because the world's going insane, and then you've got an algorithm, that's determining what's going on with Bitcoin, and then obviously you have the believers that are in there as well. But there's no government controlling any of this shit.
So, but is it going to be the real question then is you're banking on where's the world going to be in 5 years? Where are the governments going to be? Where are who's in charge in 5 years' time? Where's the economy going to be? And which economy? Which currencies are even going to be viable in 5 years? I mean, there is so many. I think that compared to when we met, maybe like 5 years ago or whatever, back then we could imagine maybe things in crypto getting to where they are now. Like, oh yeah, we're the fanboys, the moon boys. But to think where everything will be in 5 years, that's sounding kind of sci-fi. That's kind of sounding like
yeah.
And so back to these DeFi platforms, people are trying to crack the code to create a kind of way to make money through tokens without trading.
How would that ever happen? Let's say somebody did crack the code on when to trade, timing of the trade. By the way, I don't know how you'd even develop an algorithm like that, but let's say you did, then by default, people are going to be trading at the same time, and this algorithm couldn't work unless it was competing algorithms, and then by that, now you've added another dynamic, so you got two competing algorithms trading. It's no way to do it in a predictable manner. So I don't know if we'll ever have trading 2.0, but what I'm looking for is a way to trade or a way to stake and a way to do DeFi projects where something is moving it into the hottest thing going. And
that's what I meant.
Predictably.
That's what I meant by trading 2.0. What I meant by that was it was no longer trading per se. It was no longer trading where you're buying and selling. It was actually a way, it's DeFi. Maybe DeFi. Because what you're gonna, let's say you get $10,000. Probably it's a lot of money for a lot of people. $10,000. Are you gonna start trying to trade that to turn it into 100,000, or do you just want to, or do you want to just stake it, lock it up, and with some algorithm that's super clever that knows how to do all this clever stuff behind the scenes that turns that 10 grand into 100 grand in 6 or 12 months and you never touched it, but because of the programming, that's what I meant by, and that's what people are trying to crack with these DeFi platforms.
Yeah. That I could totally see, like a Barnaby algorithm who's constantly looking for the greatest things going, and then it's programmably moving your money into, now we got Titano and Safuu. Let's try that for a couple of weeks because we can see, the momentum it's got, and then we pull out in a couple of weeks and go to something else.
Well, then I've got to tell you this other one. There's one other one that's called React. Actually, I'm just going to pull it up. Let me show you. And because you actually just mentioned, what if somebody had that? Well, people are trying to even do that. This thing is called React, and it's a crypto exchange traded funds. And look at the ones that's working: Sphere, Titano, Libero, Safuu. So they are claiming, it's very new, they're claiming that they are going to take the funds and move it between these particular rebasing platforms to catch the best ones for that day or week.
Well, let's just disclosure. I don't have any relationship to React. Do you?
No, I just found it. Nothing.
Okay, all right. Keep going. I just want everyone to know that.
Yeah, I've just found it. I've not invested in this at all, so I can't speak to the authenticity. I can't claim that there's actually a secure team or anything. It was purely that you mentioned that. We're just showing you some sites that are very risky, that we don't know who built them. They're all anonymous teams. All of these teams are anonymous, but they have been what are called there are these rug, what do they call them? Rug proof. Like there are these sites out there that do a KYC check on the team, but they don't disclose the identities. So what that means is that somebody has eyed the people, which means that if they do run off with the money, that they can be hunted down because the people who...
Yeah, that's a great idea.
Yeah, so
I didn't even think about that.
It's actually very clever. You can remain anonymous in a project, but you reveal your identity to one of these known parties. So basically, that means that they check you out. They get all your ID, even your address. They eyeball you. They get your passports. It's like they know everything about you. And then they tell everybody else, "Yep, we know who launched this, but we won't disclose their identity." And so, why does somebody do that? Well,
where are they based? Where are they based?
Yeah, We'll have to look that up. I don't want to. I'm not quite sure.
Okay,
I can't
all
even
right.
vouch for these guys. Like I'm not actually.
That's what I'm
I'm
saying.
sorry. I can't. All I'm telling you is what people are doing, and so
Right, right, right.
these different companies are now eyeballing people. And why would somebody even want to be anonymous? Well, what if you launch one of these platforms and you're not nefarious? Let's say you do all that you can to make it work, but the markets just tear you down as they do more than half the time anyway. So then
Yeah.
what if there's 1,000 angry people that not because you did something wrong, but because they lost money because the market turned against the platform and they know who you are and they want to track you down. Do you think there's at least one crazy person out there that might want to do that?
Oh, absolutely. We know there
There
are.
you go. So would
Yeah,
you want
and,
to?
and that's why that's why you got to make sure you got a solid project. Or if you don't, just say, hey, you know, this is experimental. This is something that you're just giving me out of love. I think is what he does, and in return, some of these things will magically appear in your wallet. Actually, I don't know his pitch, but it's something like that,
Yeah.
right? He's not saying you're gonna make a lot of money. He's just saying, this is what could happen or probably will happen. I believe, and correct me if I'm
No,
wrong.
yeah, that's what he
That's
does.
his
But he
whole.
is also quite clever because while he advocates, he shares who he is as a name, and he lives in Europe. Nobody knows where in Europe, so he's made sure that nobody knows his where he. So even he doesn't want anybody finding him because of well, he's got like what, 500,000 people now invested in his Hex platform, and anyway,
Yeah.
so crazy times in DeFi.
Right.
But those are some of that was all like a little snapshot into that particular kind of DeFi platform that we can't recommend. They're very risky, but if somebody wanted to be
Yeah.
crazy and look at them, then it's interesting, right?
It is, and I kind of like it what we're going through. All these experiments in finance and through DeFi and all, NFTs and all the rest of that stuff. I kind of look at this as one giant experiment. The winners will emerge. We'll all double down on the winners. I mean, clearly Bitcoin's a winner, and it'll just get better and better and better. And I think open up more opportunities for the average person to invest in something that provides value, and they grow wealthier as a result of investing in that. I still, when I guess there are a couple now, but where are the platforms, the VC crypto platforms, where you can invest in tokens that are used to purchase startups and other things, and then you're rewarded through staking of those projects. I haven't seen them. They might exist, so if they do, please let me know. But stuff like that, I think, would
Well,
be
some of
more
these ones
valuable
we
to
just went
people.
through, they're claiming to be that. They want to build out their treasury fund. So the thing, but
Wonderland
nobody's
Didn't Wonderland claim that they have a fund, they're gonna invest in
exactly.
things and
So nobody's actually really come through with the goods yet. Time will tell. But here's the other crazy bit to throw in there is that essentially people love bright shiny objects. They love the new thing and they love a high return. That these are just facts that people. So
yeah.
is it possible that even with all this innovation, that people just keep launching new projects and people just keep hopping from project to project? Not that the project they left was bad, but they just love that jumping to something new. And so what if the whole thing becomes just a jumping frenzy for the next years?
Well, that's what React sounds like it is.
Yeah.
That's what it looked like. Anyway, I hope that's like chaos to me, but we'll see what
Well,
happens.
these are chaotic times, right? I mean, I also just throwing in there like with Bitcoin being the gorilla in the room, uh, and comparing that. And I don't mean anything by this, but let's say Richard Hart with his Hex and his lockup for 15 years. There was no way, there was no way to lock up Bitcoin. So apparently, even the developers on Bitcoin itself, those people who built it, the programmers, they didn't hold it. So
Wow.
nearly all the programmers have not become incredibly wealthy.
We know Satoshi has, and if
Yeah,
there
but
is a
Satoshi
Satoshi.
hasn't. So let's park him for the moment. But the actual programmers who were working on it, every time it did a 10x or
Yeah.
100x, back from when it was
Right.
1 cent, they were selling it. And so apparently, so what that means is that it's very hard for people to actually even hold on to the winners. And that's where this,
Yeah, because you got 10x return, you're going to want to sell. I mean, you'd be crazy not to. But I think the formula should be sell your, either half or sell what you've invested into it and let the rest ride is kind of the moral.
but imagine if
If
you'd
it's a
done
good
that. Let's say
product.
you got into Bitcoin at $10, and like then it gets to 1,000. You're like, yeah, maybe along the way you sold half. But anyway, man, it's not
Yeah.
easy to do this stuff. So I think that these DeFi platforms are trying to figure out the right. They're trying to programming the staking mechanisms that's going to get people to lock in, to make a return. It's interesting.
All right, so let's wrap up Titano. I don't know about these things, folks. You might want to put a little bit of money in it so you learn more. I think we're on an evolutionary track. This might be V2 of Wonderland. I don't know. I don't think so. I haven't seen what their phase 2 is yet, but just watch these things because eventually a winner is going to emerge. There's going to be something that makes a lot of sense that adds value back into the market or a project, a real world project. That's going to emerge in DeFi. There's no question about it. I'd say MakerDAO already is. I mean, the buying and lending of crypto and money is definitely a use case that's it's going to live on for a long time. But so that's my summary. What's your summary of Titano and its forks?
So, I mean, in a way, going along with what you said, but also maybe something the opposite. Invariably, finding out early and getting in early and writing it up, but that's timing it. But basically, knowing which one to get into early on and writing it up.
Knowing which one.
That typically makes people. I mean, I've seen people who there are videos of people who put like $1,000 into Titano and turned it into $200,000 or $300,000 in a couple of months.
It's unbelievable. There's videos of people that put $1,000 in a Doge and
that's right.
Or millionaires.
So it is real. So the point is however, these have a lifespan. Those sort of returns are not sustainable, and everybody in the community knows that. So my final sum up is Titano was the innovator here. So is it often good to go with the innovator if one was going to do that at all, or some of these competing platforms who've taken those core ideas and built upon them? Like I showed you, Safuu, it's got an interesting chart. It seems to actually be holding up better than Titano. Should somebody look at that one? How about Libero? They've got some other interesting tweaks. They've actually got an ability they pay out a return on a stable coin. And what about this new Sphere one? They're claiming that they're going to be the S&P 500. They're going to collect their treasury and basically be a VC. Will they be able to survive the coming months? It's highly risky. And everybody watching these ones, you've already missed the boat on getting in early. They already launched between 1 to 5 months ago, but they're still here.
Yep.
But so
they're very risky. I think they're experiments. To me, they look like pyramid schemes, not in a bad way, not in a nefarious way. When you go into a pyramid scheme expecting the whole thing to fall apart. I don't think they are. I think this is just an experiment that we have to do in order to learn from so that the next generation is that much more valuable to everyone.
Good stuff.
All right. Thank you, Barnaby.
Thanks, Mark. Thanks, everyone. Good luck.
If you've had the problems with banks and inflation and anything having to do with the US dollar or any currency around the world for that matter, you know how important crypto can be, but it's got to be the right crypto. So our friends at Tetragard have decided to create what's probably generally considered an ETF with 3 tokens, Bitcoin, Ethereum, and PaxG. They've wrapped it all up with a rewards token that's built in, and it's easy to buy. It's really quick at the website here. Now, the best part is you're getting rewards while owning this, and therefore you're making money just by holding onto it. How could you go wrong with this? Why would you buy Bitcoin, PaxG, or Ethereum separately? We can get them all wrapped together at the lowest prices with a rewards token built in. I can't think of a reason why. Can you?